the most recent letter that we sent out. You guys can verbatim copy this. We are getting currently over a 1% response rates in huge, highly competitive markets, including Houston, including Baton Rouge, Louisiana, right? Where else have we sent this one recently? I have to go through all the list. Jacksonville, places that so many of you invest. We are getting an over 1 response rate with this letter. So take notes. Right. I don't know what that little blip is at the end. We got to have our guy fix that. But what's going on, guys? Welcome to the Collecting Keys Real Estate Investing podcast. Today you have the Mike and Dan show where I, Mike DeHaan, and my co-host, Dan Austin, we talk about real estate, investing, business, and everything in between.
Our favorite movies.
Our favorite movies.
We're movie critics on the side here.
Yeah. I mean, they just had the Oscars, so I guess that's a relevant thing we could talk about.
That is relevant. Yeah, let's not talk about that.
So really quick on the Oscars, they had a huge increase in interest this year versus last year. And last year, no one gave shit. So few people cared that's why they had the whole publicity stunt where Will Smith went and slapped. Which I can't believe was a whole year ago. That is greatly disturbing to me.
Was that at the Oscars?
I think so.
Oh,
was that at something else?
I have no idea. I'm
pretty sure that was at
any of those.
I'm pretty sure that was at the Oscars. Okay. But this year they had a lot more interest, and here's why. Because the movies that were actually nominated were movies that people actually liked, so people wanted to see those. And also, too, the people that were nominated for stuff, they were kind of wholesome people, and not a lot of these kind of shitty
weirdos.
People that everyone was sick of.
Hollywood people.
Yeah, so the guy that won, Best Supporting Actor was from Everything Everywhere All at Once. If you saw that movie,
never heard of it.
It's a good movie. It's really hard to explain. It's like this kind of sci-fi sort of movie, but the guy that won, he was like the Asian kid from Indiana Jones, the Temple of Doom, like the taxi driver. You ever watch that?
I haven't seen that in a long time. I would not put those together.
So he got super famous from that and from the Goonies. He was the Asian kid in the Goonies.
Kid in the Goonies. Got it. Okay, yeah.
And he's done nothing for the last 30 years except for this one movie, and he won Best Supporting Actor for it, which he was great in the movie. So, but that's wholesome, and he's so grateful and the whole thing. And here's the thing, Hollywood, that's what people want. People don't want your outrage like a bunch of spoiled rich people
movies
doing dumb stuff. They want the comeback story. But anyway, that's our movie section.
There you go.
But the real business at hand right now is, as everyone is talking about, by the time this comes out, we're going to be a week late, so everything will be completely different.
Yeah.
But the Silicon Valley Bank collapse. And first off, we're not going to go into details about why it happened and all the details because...
Why not? I want to.
What are we now the banking experts that I've been hating on for the last 4 days?
Absolutely. Everything about. I know their whole balance sheet now. I've been memorizing it.
Every time something like this happens, there's any sort of crisis, whatever.
Everybody's an expert,
dude. All the whiteboard, literally the whiteboard bros Instagram joke I made a couple weeks ago. I saw 4 different dudes that I'm I haven't seen you post anything that's actually educational for the last 2 years. They have their video that they made of them standing in front of a whiteboard trying to explain how the SVB thing happened. I'm since when did you become a...
And they're and that's why I don't put $250,000 or more in a single bank account. Never have, never will.
I'm going to completely ignore the fact that I don't have $250,000, but that is why I don't do it.
Thanks, bro.
Yeah, but they all come out. Everyone's a banking expert. Everything, the whole thing is just ridiculous.
Right.
There were some bright minds that called it a while back, like Jay Scott. If you are going to listen to somebody that probably actually knows what they're talking about, Jay Scott, he's wrote the Bigger Pockets house flipping book. He's a super sharp guy, and the stuff that he went through, he's really, really bright when it comes to the economy and everything else involved. But he's been posting a lot of stuff about the actual details and the financial things and all stuff that happened, how it's related to the interest rates and everything in between.
So in case you've been hiding under a rock, Silicon Valley
that's
Bank
true. We should probably talk about what actually happened.
Is a top 10, I guess, banking institution in America that catered to startups, hedge funds, and venture capitalist firms, people essentially wanting to invest in startups. Like that was their biggest depositors, their biggest clients. And we're not talking like Facebook, we're talking small startups I think it's very interesting conversation of why it happened in a sense in the larger economic picture. But essentially, that bank failed and became insolvent last Friday, which is also sweet because all the executives paid themselves bonuses and have been selling stock for a while because they've actually known this is a problem. And I do think that, so they've known this has been a problem at the bank. The executives there have known about it, and they've made some of this public months ago. It's not the first time, it's first time for laymen like us to hear about it, hits the news, and all of a sudden everybody's freaking out, like, oh my God, we're failing. It's 2008 again. But anyhow, it's interesting to see what went on and how that plays with us in real estate, because it kind of goes back to interest rates, which is all what we're talking about.
Yeah, it does it. And so, what is like the explain like I'm five version of why it failed? I know you're probably more versed on that than I am.
Right. Yes. On as the very, very high level version of this is that essentially they got a bunch of money and they needed to do something with it. And so they bought assets called treasury bonds and mortgage-backed securities on a long-term time horizon. And when interest rates shot up, those assets became worth a lot less. And then people stopped putting money in the bank because they were spending all the money in the bank, and now they didn't have money to give to people.
Okay.
Gotcha. Right. And so the biggest, that when I say that interest rates played a big factor in this, is because interest rates, when you go and buy a bond, the bonds trade basically on the market as at value. So if you buy a 10-year bond, you really only realize that value of that bond when you sell it. Okay. And so if you buy a bond like they did, earning 1.5% interest, but then interest rates shoot up to where they're at now, what I don't know what the daily rate is now, shoot up really high. Why would you buy a 1.5% bond when another company, another bank is going to issue bonds at that new interest rate? You wouldn't, right? Which means that bond, to sell competitively on the market, has to basically sell for less so that the person is effectively getting the same interest rate as today's rate.
Yeah,
so
it's
what
being
they
sold
did,
at a discount from
at a discount. Yeah. And so they sold $21 billion worth of bonds recently to make up for liquidity gaps, because again, all these startups were burning cash, but nobody was investing in startups right now. Venture capital is dried up because it's too risky. So they're spending all this money, and they sold those bonds at a $1.8 billion loss at the exact same time the bank announced that they need to raise money to make sure that they had enough money for their depositors. And the market freaked out and did what's called a run on the bank, where everybody was told, get your money out of that bank, it's failing. And everybody did. And then the people that didn't have lost. Yeah.
And so I think, it's kind of a perfect storm, right? So they had all these bonds they couldn't sell. They couldn't get the money, to pay back these people that needed the money, like these different startups that needed the money to run their failing startups, while all of Silicon Valley is just collapsing right now. And there's these huge layoffs and things going on. I mean, even Facebook, they posted today that they're laying off another 10,000 people.
So here, right. I would use a different term than failing, as in that they're resetting, because so let's, in context of these big tech companies laying off, and it's not just big tech, it's little tech as well. Most of the big tech are laying off, and they still have the same amount of people as they did before COVID happened. And in some case, although they're laying off, they're net positive, still hiring employees. But they're laying off all the people they don't need anymore, right? That they hired during this buildup. With Silicon Valley Bank, their balance sheet tripled since 2020, which is because the Fed was printing money, and venture capital in 2020, 21, 22 was just like, everybody gets money. Everybody gets a little bit of venture capital, right? And that's why they had this huge problem, is Silicon Valley Bank had all this money come in, and they're like, we have to put it somewhere because we're losing money by just sitting in a bank account.
Yeah. I wonder how many of those, how much that comes back to like the PPP loans that people were getting.
It's a ton of it, the whole thing.
Yeah, and they're just like, it's free money. I might as well just swing for the fences with this and like throw it into a bunch of startups, and hopefully they'll 1,000x over the next 5 years.
And the Fed, in their defense, they were like really worried, because you remember in COVID we had that super sharp dip. Well, they did quantitative easing, which is essentially putting tons of money into the system by buying shitty mortgage-backed securities, which they've been doing for years now, right? By buying those so people can go get loans, because the banks can basically loan that money out at dirt cheap, and then the government will buy those bonds, right, as they wrap them all up. Nobody else will buy them, but the government will. So that's your quantitative easing. And then on top of it, the PPP loans, they are printing money and literally like actually just shoving it into the market to people, which also created this glut of money. And it was a great time the last 2 or 3 years, as you and I know, with our rates were dropping and the values of our properties are going up. Yeah.
Okay.
So
that makes sense.
I just want to make one last correlation. This is the correlation I wanted to make with all that crap we just said was, think about this, all you awesome dudes and gals that locked in 2.5 interest rates on your home. It's really challenging for you right now to think of a day that you would sell it for the same price you paid for it. If you bought it in the last few years. And that's for this exact reason, is because as interest rates go up, guess what's got to go down? Just like in a bond, your property values have to go down. And so your house that you maybe paid $500,000 for in 2021, and you locked in a 2.25 rate, and you're like, I'm winning 30 years at 2.25. Do you really want to live there for 30 years? If you do, you're set. You're great. Who gives a shit what value your house is? But if you're like everybody else, you want to move in 5 to 7 years, you really can't sell your house until market prices grow up to that value at the new interest rates. And they're not going to do that this year.
Yeah. Well done. I think you explained that better than all the whiteboard bros I saw yesterday. So,
well, I do think this will be a fascinating case study. This is the exact type of case study they share in business school. Yeah. And the reason why is because I guarantee you there's going to be some mismanagement discussions coming out from Silicon Valley Bank and their executives, and it's a great case study of how they went long when they really needed to be short.
Yeah,
like
right.
Buying very long-term mortgage-backed securities that are 10-year maturities when they really shouldn't have done that, because that's what kicked themselves in the ass. And so I think will be an Enron or a WorldCom without as much scandal and more management mismanagement.
Yeah. Well, and so a way that this is important for real estate investors as well. I think it exposes the risks of just the general banking system, which everyone should be aware of, especially as you grow a real estate business or you grow a business in general. You end up having a lot of cash on hand if you're doing decent, or you have no cash on hand because it's all tied up in properties, right? Especially in the wholesale business. Yeah. There's not a whole lot of in between. But I mean, it's not uncommon for us to have $500,000 to $800,000 in cash as we're waiting for our next project. And what happened in this instance, I mean, even significantly more than that, there was one of the companies that had $3 billion in cash in Silicon Valley Bank. And when you sign up for a checking account, everyone's done this, right? You sign the agreements. In that, it says in every single institution, I don't know if anyone's over this, that is FDIC insured up to $250,000. That means that if the bank collapses, the federal government will insure $250,000 of your money. That company that had $3 billion, technically they're only getting $250,000 back.
Right. Yeah.
Right? From the federal government.
Yeah. In this case, that's not they're going to. The government has said, "Hey, we're going to make sure you're whole," and a lot of people are like, "Screw that! Screw those those investors."
And this is something that's getting interesting, and this is the wholesaler in me sort of starting to fix it out. So the government is giving guarantees to these people, like, "Hey, we will give you this money at some point in the future." Mm-hmm. There are people right now that are saying, "Screw that!
I want my money now.
Sell. Yeah, I want my money now. I will give up my $500,000 guarantee from the government at a discount. I will sell this to." Mike and Dan for $400,000, even though I know it's worth $500,000.
Yeah, so I can have my money now.
I guarantee you that there are some hustlers out there, and if there aren't, I'm disappointed in everybody. I guarantee you there's a hustler out there that is going to say, "Oh yeah, you have a $500,000 guarantee for Silicon Valley Bank. I'll buy it from you for $400,000." Then they go and they find the other person that'll buy it for $420,000, and you make a little $20,000 margin.
I bet you there's already people doing it. I love your mindset there. And here's why. And this is why I also think the government should step in and actually, in this limited case, make sure that guarantee the depositor's money is because a lot of that money is like payroll money. So it's people like you and me, average Joe in America. I shouldn't say average Joe. I mean, they're probably $250,000 a year jobs in Silicon Valley, working 20 hours a week, but still there's people that are working for startups that their payroll was supposed to hit and it didn't hit because their company's money had disappeared. And so like you're really, if you're a person that's for the people, like that's why I believe that they should do that. But people are going to need to make payroll. So they're like, well, I'll take a 20% hit on my money to keep my business alive. Cause the option is die or stay alive for a lot of these startups. And you need money. The one thing startups always need is money. That's why they always talk about their burn rate because they're not producing income, generally speaking.
Speak of America. There you go.
Speak of America. Sorry. Edit that out, Sam.
Sam. Yeah, I mean, you know, that makes sense though. And I mean, cause it has such a huge trickle down effect in such a negative way.
Right.
If all of a sudden you have all these people that can't, you know, especially with so many people that live paycheck to paycheck, you have all these people that can't pay their mortgages, can't buy food, can't do these other things. That's what leads to real problems. And, you know, so many people are coming out now about all the inflation and stuff that's going to be produced when the government bails out all these people. The trickle down damage is significantly larger, in my opinion, than that inflation, which is already, especially if you look at like our national deficit, it was like $40 billion. Something. That's a lot of money.
Wait,
if
our national deficit?
No. The amount the SVB defaulted on was like 40. It was like $40 billion. With our deficit being was like 18 trillion or whatever the hell now. It's like nothing.
It's a
$40 billion. It's just you know. It's just one more thing over
now
there.
If they start like all of a sudden all these banks start failing, we might want to talk about that, and we should probably just put all the CEOs in prison.
I mean, Jamie Dimon already showed that it doesn't matter when he failed the first time in 2008 and got super rich and now still runs Chase. So
he is a man on top of the world.
Yeah. Anyway, so yeah, it's interesting. So like how that's affected real estate as well. Fannie Freddie rates dropped, which is really interesting. You know, people going and buying bonds with their cash. That's caused the rates to come down a little bit. DSCR loans for my 1031 deal finally closed and funded yesterday. The DSCR rates have gone up as of all of this happening from what I've seen. So the people that can sell to the federal government, the Fannie Freddie loans, they are a little bit more on the positive now. The private money is like, this is going to get weird. And they are now getting more conservative. So they're having higher rates on their loans. So which is another point of who the hell knows. Like, we'll see what happens.
Yeah, like, who cares what the interest rates are? Because the real hustlers are out there are figuring out a way to make it. Right now, it's easy, honestly, from a buy and hold standpoint, just to tap out for 12 months.
And that's
so much easier to do that.
Honestly, though, so like even with my 1031, with all these DSCR loans that I'm looking at, so it's a debt service coverage ratio loan. Basically, it's a rental grade loan that you get from, there's tons of companies. You Google DSCR lenders, you can find them. But they will let you buy a property based off of the debt service coverage ratio of the property. So basically, what is the rent? Yeah, so what is the rent compared to the monthly payment on the property, including taxes and insurance?
And what's the good coverage ratio like? Typical. So, what are they right now? Let's just say.
So, dude, it varies a lot. So there are some DSCR. So traditionally, for like low competitive rates with like a local credit union, they'll do DSCR loans, like commercial style loans. They'll want you to be at 1.25, 1.35. Yep. There are private DSCR lenders. If you're in hot markets such as Austin, Texas, where I'm looking to buy, they will sell you a house with a 0.75 DSCR right now.
Wow.
Which is crazy. If you have real estate experience.
How do they calculate that though, right? Because a lot of folks that would be investing in that, they're probably assuming they're short-term rentals.
So that's part of it. So they're assuming that, and then they are also willing to bet on these markets that they're extremely bullish on. So I have several lenders, particularly down in Austin, that are willing to give you a 0.75 DSCR. So that means that if the mortgage payment is going to be $2,000 and you can only earn it for $1,500, they will give you the loan, which is crazy to me. The caveat with all of that right now is the rates are insane.
Yeah.
9.5 to 10% if you're getting something that's like 0.75 DSCR, and they're locking you into a 5-year prepayment penalty with basically a 1% step down every single year. So what that means is if you pay them off, you go to refinance in 2 years, you're gonna have to pay 4% of the loan amount to get out of it. So if you have a $200,000 loan, you go to pay it off in year 2, you're gonna have to pay $8,000 just to get out of the loan. So what happens is they're locking you into these insane terms that are not beneficial for unless you have an extremely long-term time horizon. Whereas me as a business investor, that doesn't make sense. And so as I've started to look at these opportunities, I'm still weighing stuff. I don't want to pay taxes on my 1031 sale, but if I don't find something that I really like, I'm just going to take my money and pay the taxes. I have like a $40,000 tax bill, but also have $200,000. And because we have a lot of opportunity, I can take that and I can go and make that money back. It's not the end of the world.
Right. It's a lot better than doing a bad deal just to not pay taxes. And a lot of people do that because they're so adverse to taxes, which I'm with you. I don't want to pay taxes. It sucks to do that, but it's better than doing a bad real estate deal.
Yeah. There's nothing wrong with paying taxes. Paying taxes means you made money.
Right. I just don't like to pay a lot of them.
Yeah,
I just want to pay my fair share.
Yeah. So, it is a really interesting time when it comes to buy and hold stuff. Especially if you're buying stuff at kind of a retailish price, which I am looking to do right now with this 1031, just because of the nature of our business and the attention that it takes, and because it is a personal investment. So it's outside of the systems of our businmy
It's because you don't have Dan to show up and be like, "Hey, why are you not here working, contractor?"
No, seriously though, honestly, how much would how my opportunity cost to have to go and manage something like that versus focusing on our business it's challenging. Is not correct. Like our upside is significantly more than the $40,000 if I don't do that.
Yeah, it's also why we're both not doing major rehabs, because it just doesn't make sense for our goals in our business right now.
Yeah. So the point being, with all ththose things, like the rates and stuff are getting weird with the SVB stuff. And then
my hope is that it's short run, right? Like this is kind of like maybe we're peaking. I don't know. And we were talking earlier, I was mentioning maybe they're pricing in a couple more Fed rates. And that's why DSCR loans, because they're going back to that conversation. Do you want to lock in a rate at, 6% when rates actually are going to keep going up? Probably not, because you want to have the peak rate. So they're pricing in expected rate increases. And then as we get that next quarter point bip, then, or hopefully that's all it is, then maybe they start tapering off after that because it's already priced in. Just the Fed raising rates next month doesn't necessarily mean the DSCR rates are going to go up because, like I said, they're priced in already. Potentially. I have no idea.
Yeah, exactly. So, it's hard to say.
I'm not an expert. It just sounds like a terrible loan to get right now.
It does. Either way, I think that right now, it's just not like the time to be buying rentals. Like unless you're buying them at a massive discount, you're finding them off market, you're able to recover a lot of your capital, and it's a great asset that you like. That's fine. People that are trying to justify buying rentals by doing things like, fooling yourself into thinking that a midterm rental is going to be a lot better, or, trying to convince yourself that having this Airbnb in this neighborhood, in this town that isn't a destination, right, is going to be is going to make your rental worthwhile. Yeah, probably not the time to be going down that path, but I think it is a great time to be doing transactional real estate where you can make some money. Because tell you what, our wholesaling stuff right now has turned up immensely over the last couple of weeks, and we launched in some new markets that have been killer. And on top of that too, it's funny, we had our new sales guy come in. We had to part with one of our sales guys a couple weeks ago. Had our new guy come in, and I'm like, wow, is this actually what it's supposed to be like?
Wow, he's actually good.
When you go from someone who's very unmotivated, they've been with us for a while and kind of on the way out, to someone that is hungry and ready to go, it is a night and day difference on your business. Right? Self-sufficient, closing deals. He's been with us now for 2 weeks, and he's already has, I think, 1 officially signed around and 3 in the hopper that I think we should get probably by this week.
Yeah, he's doing well.
And those are just the official ones, or as of today, I've seen the other stuff going around. It's possible we could have several more here over the next week or so. But But a huge amount of that is a massive increase in response rates to our marketing. And people always ask what we do for marketing. Like there's always some sort of secret
Magic
sauce. Like
button.
that's the number one question I get all the time is like, what is your marketing? Why is your direct mail so successful? It's just 'cause we're consistent, man. And and we have our brand behind it. The people can go and they can verify. It's very easy to see. And when we go and we send out stuff, it has a clear call to action. It has a clear intention about what we're trying to do. We're not sending like are you in trouble? Are you going into foreclosure? You should call this. It very specifically says, in fact, here's what I'll do. I'll see if I can I'll read you the most recent letter that we sent out.
Please read it.
It's like the most basic thing.
While you pull that up too, I would just also comment that if you're trying to get leads from somebody a company that has to name their company Magic. I don't know anybody called Magic, but magicalleads.com or anything like that. It's not magic. There's no magic. It's your lead gen company should be we show up every day consistently and do the same thing over and over again and find you leads.com.
Yeah. Yeah, right.
That's how you
totally. Do it. I know. Yeah, anything that's fat, super magic leads or like motivated sellers. So motivated seller leads, that's bullshit, right? I hate all that. Right. But yeah, so this was the most recent letter that we sent out. You guys can verbatim copy this. We are getting currently over a 1% response rates in huge, highly competitive markets, including Houston, including Baton Rouge, Louisiana, right? Where else have we sent this one recently? I have to go through all the list. Jacksonville, places that so many of you invest. We are getting an over 1 response rate with this letter. So take notes. Hello, first name. We are a real estate investment company looking to buy properties in blank city, right? You insert your place in the blank. We are interested in making you an offer for a property address. We buy in any condition. You can offer you flexible closing dates to fit your schedule. We also don't require you to pay any realtor fees. Could you please call or text us at phone number at your earliest convenience? Thanks, Mike DeHaan. Here's our phone number again. Here's our website. That's all.
Cool. That's too
all
simple.
We're sending.
Doesn't work. Too simple.
And everyone always thinks we're full of shit, but we're not.
Yeah.
It's so simple.
I don't know how else to explain it to people. It's just it works. I don't know what to tell you. It's pretty simple. We just execute better than a lot of people.
Yeah, and we have a sort of series, I guess, of letters that we send that builds off from the one previous, and it sort of built a little bit of a story around our brand, and it pushes people to our professionally designed website, not a shitty carrot website that has the same copy as everybody else.
Yep.
And we have a sales and follow-up process, and that's it. That's the whole business. And so many people try to have these crazy bait and switch and all these sort of things. No.
Yeah, or they're just looking for the easiest or cheapest way to market, which isn't always going to be fruitful. Or they don't want to market every month. They think let me just market 1 month and I'll just make a bunch of money and I'll stop until I'm ready to do it again. It's that's not how it works. You have to show up and just consistently market and consistently follow up with your leads.
Yeah, exactly, right. And it's funny, as you go through this too, a lot of people, they say direct mail's really expensive, whatever. Our average cost per lead is between $3,000 to $3,400. Not cost per lead, deal. Sorry. Cost per deal. Our average cost per lead is close to $100. Our average cost per deal between $3,000 and $3,400. And when you're new, you're damn, that's a lot of money. But our average deal size is also $17,000.
So basically the quick back of the napkin math is you need 34 leads into our system to get a deal.
Yeah, exactly.
Right? If it's average cost is $100, average cost or cost per lead is $100, average cost per deal is 34. Do the math, 3,400, do the math, you get 34 leads. And so if you're a person that wants to buy a property, we just gave you the equation, go and get 34 leads.
Mm-hmm. Yeah. And so that's direct mail leads. So the number of leads required goes up with some of the other stuff we do, whether it's SMS or I remember when we used to cold call.
Really high.
So SMS is it's probably 90 something. I remember when we used to cold call, it was about the same. It was 70 to 80 leads. And all those leads, they would, we talked to them back and we'd say, oh, you want to sell your house? They'd be I don't know, you called me. It's well, that's not really the conversation that I want to have. Versus
it's a cold open for sure.
Yeah. Versus the reason I love direct mail, and this is what we were talking about with some folks in the Instant Investor program today, Every single person that enters into your system with a direct mail lead, every single one. If you think about the seller's story, okay, they received, a piece of mail, and they
received a lot that day, probably.
Yeah, probably received a lot. Yeah, they got an envelope. They said, "What's this?" They opened it, they picked it up, and they looked at it, and they said, "There's a phone number here. I am going to take time out of my day. I'm going to go find my cell phone. I will pick it up. I will dial the number, and I'm going to be willing to sit on the phone with somebody." They already raised their hand and said they want to have a conversation. Okay? Regardless of how that conversation goes, they have an interest in selling their property, and there is an ability to monetize that. Whether it is you buying at a wholesale price, you buying it with creative financing, you doing a novation with them, you referring it to a realtor, right? They went through that whole process willing to have a conversation. In today's world, no one has a conversation if they don't have to.
So
honestly.
True. Yeah, so true. You're absolutely right. It's like you can take that, say you're just doing direct mail like you just said, because that's a very good motivated lead that's raised their hand. Take that $100 and figure out how to monetize it. You have multiple ways to monetize it. It's not, and this is where you and I started, was like, but we have a cash offer and we will close fast. I'm like, I don't care. I don't care. Like, and then we can't figure out why we're not closing. It's because that solution is not aligned and it's to solving that person's problem. But that person might have a retail ready house that you should be referring to a realtor or taking down, if you're a licensed agent, taking down yourself and listing, because you can monetize that $100 lead pretty quickly doing that. Or, maybe it is a rundown crackhead house like you and I love to buy.
Yeah. And if
offer.
Yeah, and if they're not ready to move forward right now, establish that relationship, right? Continue to follow up with them over the weeks, months, and years, and stuff comes around, and you do that for long enough, that's where a pipeline comes from, and that's where opportunity comes from.
That's such a great point, because like, look at it here. Here's a good analogy. It's like every time a lead comes into your CRM, think about it as $100 bill. Like that, there's $100 bill. If every time somebody called, you got $100 bill, would you just ball it up and throw it away if you couldn't spend the $100 bill right now?
There you go.
Probably not.
Yeah.
You would invest it into your system. So move that $100 bill to the stack of $100 bills where you're like, I got to call these people to get that $100 bill. I got to call them back. I got to text them back. I have to follow up with them. It might be 1 year. It might be 2 years. It might be 1 month. It doesn't matter, because that $100 bill is going to turn into $17,000. The sooner it turns into $17,000, obviously the better ROI, but $17,000 off of $100 is a lot better in 2 years than just throwing it away and balling it up now. Still great ROI.
Yeah, exactly. And it's hard when you're starting out to sort of have that long-term mindset, but that's where real money's made, and if you're in this to work on things quick, you're trying to make like a quick buck. Honestly, it's not the right business. It's a legitimate business these days, especially wholesale real estate. There's still these guys that go around Instagram that sell it as a get rich quick scheme, because that's what they were doing in 2015. One of them's name is Lamil Dagam, whatever. I'm trying to find something that rhymes with his real name.
His name rhymes with Jamil.
Yeah, but he is a bigger pockets guy now, and he has it wholesale the house himself for 18 years.
Yeah.
So now he goes and talks about how it's a get rich quick scheme, because for him it was back in the day, because he was the only guy. Now you have people with real money, real systems, real platforms that are going and doing this, and it is no longer a get rich quick scheme. It is a business, just like everyone else. And not only that, but there are people who are taking the systems and they are adding them into their flipping businesses, their rental businesses. They're competing for the same deals now as the wholesalers, because the barrier to entry for it has dropped so much. And if you don't approach it with the same mindset, you will not be successful. The only people who get rich quick off this are people who are doing super illegal stuff, and they're like lying to people, and they're doing some weird things.
And they're not getting rich quick either way.
They're not. Yeah, right. They're not. Yeah, they're going to lose it all pretty quick.
They're still doing dumb shit.
Yeah, some people get extremely lucky. Sure, there's always the story of like the kid who, like, I don't know, was out for a jog and like ran into a farmer, and the farmer's like, "You want to buy my land for $1 million?" And he goes and finds someone for $2 million to buy it, whatever. But that's bullshit. Like, that isn't how it works 99.99% of the time.
Yeah,
and a big part of that system that you have to develop is the sales and follow-up process, which everyone always overlooks and focuses on the marketing, which does not matter. Sure. Like, I literally gave you the letter that we sent out this month. that we have produced. I'm going to see. So with that letter so far for the month of March, we have 200 leads in the system in 14 days from that letter, right? And we have sent, I should actually look at the total number we've sent, but it's not like an insane number of letters, probably about, I don't know, 15 to 16,000 so far. But like a lot of those haven't even hit yet. They're going to be hitting over the next 2 weeks.
Across those two markets?
Mm-hmm.
Yeah.
Well, across several markets, yeah.
Oh, okay.
But anyway, so point being, guys, it's not rocket science. And it is a great time right now when you are unable to buy rentals to make that your primary focus in your real estate investment business, is developing those lead generations and doing transactional real estate. Because tell you what, homeowners, they are still wanting to buy, especially if you're in that lower price point range. Yeah. And so just get deals and sell stuff to them, do a quick flip, sell fixer uppers on the market, find flippers that want to buy starter homes. That's where it's at right now, 100%.
Yep, starter homes right there, slightly below the middle price point, the median price point of your market. Hot kicks right now.
Yep, exactly. Yeah, avoid like the step-up homes, like the people that are selling the starter homes and moving into the higher tier price point, because that's where it's getting a little tricky right now. But
for sure.
Anyway, so cool, guys. Anything else you want to add, Dan?
No, I think we got to get off our soapbox now before all of our listeners walk away. God damn.
Hey, I mean, got to be on the soapbox sometimes.
Yeah.
But it's something that I've gotten, I guess, extremely passionate about recently as I've been talking to more and more people and seeing a lot of the, the questions, I guess, about the off-market space. And also, too, I've talked to several people recently that have said, like, oh, yeah, direct mail is just, like, terrible. I'm like, but I know that it's not. Like, I know that you're wrong.
Yeah, it works in every single market that we've been in consistently. And I'd argue that besides one of the massive franchises, which I would not include them in this, somewhere like Home Investors or something like that have been around a long time, we've probably been in more markets than any other wholesaler.
Probably at this point.
Country at this point. And done consistently successful, profitable business in all these markets, some of which we've never stepped foot in. Mm-hmm. So you bring local expertise to that argument, game over. We know it works, 100%. Yeah. All the time. It works every time, all the time, something like that.
Yeah, and not only us, but now, I mean, we are covering some serious geography with our instant investor members these days. Yeah. And there are people that are getting stuff done all across the country.
Yeah. In hot markets, big markets, little markets, rural markets. I mean, it works.
It does. So, awesome. Cool, guys. All right, well, thank you, everyone, for listening. Quick bookkeeping thing. The store for Collecting Keys, if you want to get some Collecting Keys merch, is now live. You can go to store.collectingkeyspodcast.com. You can get some shirts. You can get yourself a Collecting Keys podcast shirt. You can get yourself a BDE shirt. And we have a couple other ones that we will be working on here as things come together. I want to figure out a way to do like a Whiteboard Bros shirt. But I gotta.
It can't be a white T-shirt, because if you have a whiteboard on a white T-shirt, it won't be able to see it.
That's like an outline. if you have a whiteboard on a white wall, is it invisible? No.
Good point. Touche. Yeah. Somebody's got to at least go buy it so that our guy Daniel, that's building all this for us, is like gets pumped so that he feels excitement that somebody's buying stuff from us.
Yeah. So everything on there, like, we're not making any money off those. It's purely just for people that want to buy shirts. So go check them out. They're cool stuff. We get like the Bella canvas tees. They're soft. They're nice. Everyone that's gotten a Collecting Keys shirt so far that we've sent out to people, they always compliment how soft it is. So you should go get one of those at store.collectingkeyspodcast.com. Outside of that, if you want to start getting some off-market deals, go to collectingkeyspodcast.com/free. Get your free 5-step guide to start generating off-market leads, and that can get you started. Besides that, share this with your friends. Hit us up on Instagram. I'm at Mike_invest. Dan's at InvestorManDan. Besides that, we appreciate you all, and we'll talk to y'all next week.
See y'all.